Warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko, and with me on today's episode is Radiant Christina Pius.
Hello, viewers.
Africa, and indeed the developing world, plays host to many multinational enterprises in several areas of business: the distributive trade, manufacturing, services, name it. And it's been suggested that these countries, by the very nature of their underdevelopment, are at the receiving end of the antics of tax-dodging multinationals who engage in all sorts of practices aimed at reducing, if not outrightly evading the payment of taxes. The effect is further underdevelopment as African governments are starved of, or if you like, are denied the necessary funding for the provision of infrastructures for their various communities. The good news, however, is that Africa is waking up. If you like, Africa is arising. For 3 days, from the 19th to the 21st of April 2016, delegates from 19 African countries under the aegis of the African Tax Administration Forum, ATAF, gathered together in Abuja, Nigeria's Federal Capital Territory. And the single objective, the common objective, is combating aggressive tax planning by these multinationals.
Welcome to the opening ceremony for the ATAF technical event, a workshop on aggressive tax planning. Mr. Chairman, we have registered for this event 43 participants representing 19 different countries.
Chief host, Mr. Babatunde Fala, the executive chairman of the Federal Inland Revenue Service, was on hand to welcome the workshop participants.
Over the years and over various conferences and workshops that I've attended, there's a central theme. And each time we go, people talk about competence of tax authorities, capacity. And in some cases, they talk about compromise. So basically, we have 3 C's that you might not find in a tax book. But when I talk to my staff, I ask them, do we have the competence? If we have the competence and we have the capacity, and we're not doing what we should do, then that means we're compromising. There are so many figures that have been thrown back and forth. The OECD estimates that $250 billion are lost annually due or from or through tax planning. Now the issue is that, what are we doing? I don't think it's a question of whether we're competent, but what we're doing is that we're trying to even increase our capacity through this workshop. It is clear by all terms that Africa as a continent is blessed with natural resources, but Africa still remains the poorest continent. Africa is one continent where our currency is in a constant state of dance. We can't even plan with our national currencies. And unfortunately, a lot of African countries are still very high on the trade agenda. We don't produce. And so we find ourselves in a vicious circle. Governments can't fund, are not funded through taxation. So governments can't provide services and the required infrastructure for business. Our job, basically, is to ensure that we collect all revenues due to government, make sure we fund our government so that government can provide that conducive environment for business and also for living. This workshop, I believe, will provide more than adequate information so that when we go back to our respective countries, we'll be better equipped to deal with this. We have, I'll call it a divine responsibility. We work for the people of our various countries, and in funding government, we're working for them. So please make sure let's all take the best of this opportunity so that when we do go back, we'll be able to increase revenues in our various countries and stop expecting to receive aid from one country or the other.
This workshop comes at a very opportune time. I'm sure all of you are aware and have the terminology the Panama Papers now in your minds. If you don't, you have some serious reading to do in a very short time. Because the leaks of the papers of the company Mossack Fonseca is certainly extremely important to the work that we do. This workshop is a result of what's happened over the past 2 years in the 16th arrondissement in Paris, where they discussed the approach to the 15 action plans of the base erosion and profit shifting action plan that has come out of discussions initiated by the G20. And what we've done was, at the end of 2013, we found that we were actually caught with our, to use the term, the proverbial term, caught with our pants down. We had not taken into account as ATAF the rate at which these discussions were going to take place. And by the beginning of 2014, we very quickly had to change our annual work plan to accommodate those discussions, the global discussions that were in the process of changing the new rules, the new global tax rules, because we're in that process right now. So we arranged for a consultative meeting of our member countries in Pretoria to discuss what the African approach was to this process. And out of that, we established a technical committee on the taxation of cross-border transfers. And through this technical committee, we then, through different processes, we managed to establish, in one way or the other, what the African approach and what the African response was to the base erosion and profit shifting process. Also, identifying areas in which African countries were most affected by, and then also developed responses to those and the inputs to that process. I'm keen to see you getting stuck in your work, rolling your sleeves up, because this is not a conference and this is not a lecture. This is an actual workshop where you're going to have to get dirty in the discussion.
And I guess the participants indeed rolled up their sleeves.
Yes, they did.
So what happened?
As we said earlier, for 3 days, African tax administrators looked at various topics aimed at preparing themselves to counter the antics of multinational enterprises who use several methods of aggressive tax planning to shortchange their host countries. Topics for discussion included the use of profit shifting through excessive interest deductions, hybrid mismatches, and a critical look at the OECD G20 base erosion and profit shifting report. On day 3 of the workshop, council members of ATAF, who were also holding their executive meeting in Abuja, took time off to see the workshop participants in session.
The ATAF Council is busy meeting upstairs as we prepare for the business of ATAF and we look at the work program and also prepare for the General Assembly. But the work you do is the important work of taxation, and that is what the chairman wants to talk to you about.
Delegates were treated to the warm Nigerian hospitality at a dinner hosted by the executive chairman of the Federal Inland Revenue Service.
You spoke to some of the workshop participants, didn't you?
Yes, I did.
Why did ATAF decide to organize this workshop?
We decided to organize the workshop based on our participation in the OECD Base Erosion and Profit Shifting Project. So our participation was in 2015, and from that, the outcomes of BEPS are being implemented in various countries. We've thus decided that in order for our African countries to understand what BEPS means in implementation, we should have what we call awareness workshops. So this is the first awareness workshop, and it's on aggressive tax planning, or rather combating aggressive tax planning.
What we have come to do is to understand what aggressive tax planning is from the other side. Taxpayers undertake aggressive tax planning. We must also work around them, understand how they operate so that we'll be able to circumvent what they do by legislations.
I think this kind of a forum is extremely important to most of tax practitioners and also tax administrators, because if the G20 and the OECD have been given these mandates by their member country, and they seem to be lobbying a lot of support from the United Nations, then it means that this might be the pool. Everyone has to be part of this train, and therefore African countries need to be aware of what is taking place in the international arena. Why is it important? African countries and most of the developing countries are now emerging economies, and therefore they are attracting a lot of cross-border trade. They're attracting a lot of multinationals, and therefore if those multinationals have their presence in Africa and the African tax administration are not aware of certain schemes which are in place, which have been tested elsewhere, then we all are not able to tax the transactions arising out of those kind of schemes. So it's an awareness call for tax administration, and then from that awareness call, then the tax administrators, through their policy framework, through their national treasury, of course, the parliaments in their own countries, they probably need to start changing certain laws after clear evaluation of whether those circumstances suit them, because a decision for them to make. Because OECD BEPS action plan, they only bide the member countries and the BRICS, so to speak, the countries which are characterized as BRICS. So that the other countries just need to make a decision whether to accept them or not. When you accept them, then you start preparing, because it might impact on you negatively when you have all these cross-border transactions.
The importance is that in the last 2 years, the global community on taxation have developed new rules, new standards to deal with tax evasion, tax avoidance, and it is important that African countries also look at the work that has been done and implement them in their respective countries with a view to ensuring that their own income is not taken away to another country.
The theme is aggressive tax planning. What we want to ask, why this theme? Is it because of the issue at hand now where almost every country is practically depending on taxes, or there's another reason for that theme?
Ordinarily, countries are expected to depend on taxes for their revenue. It is not common to do otherwise. But why this theme is not because we are depending on revenue only, but it's because Africa must have its fair share of the revenue. If the economic activity is done in Africa, then the tax revenue should also remain in Africa.
What's the outcome of this workshop going to be? Like, how effective do we say the outcome will be? I mean, we had about 19 countries here or more. What do you expect to be the outcome?
Well, firstly, based on the discussions we've had, we've noted that a number of the countries participating don't have sufficient interest deductibility rules. So our immediate advice would be to draft model legislation around this. So that is the first immediate outcome of the workshop. The second aspect is that once we plug that hole or that gap in that in that legislation, we will start to see what we call hybrid mismatch arrangements, and then we would draft guidance on that for African countries.
We noticed that most of the papers presented were part of the OECD BEPS action plan. Now, if this is fully implemented in Nigeria, or let's say in Africa, how effective will it be?
I think it will be very effective. Once you introduce interest rules, the reporting by multinationals then changes, and you can go after certain revenue that you might have missed. Further to that, I think it presents an opportunity for African countries to start thinking about what kinds of transactions are taking place on the continent. You must remember we don't live in an isolated world. It's a globalized world. So in a country like Nigeria, you're starting to see more multinationals, Nigerian multinationals, spreading their wings on the continent. And in those transactions, some taxes need to be paid in Nigeria and some need to be paid in other countries. And we're trying to encourage our revenue administrations to look out for these transactions, to have effective legislation to deal with certain transactions, and above all, to prevent aggressive tax planning.
The effectiveness is a function of one big factor, that is the operators. And that speaks to our capacity, technical capacity, and the political will to implement the rules the way they are meant to be done. If we have this consensus, we are able to do this, then you will find out that even for entities that intend to engage in tax evasion, they are going to be caught.
It is hoped that, like Mr. Fowler said at the opening ceremony, these kinds of workshops will further help in building the competence and capacity of tax administrators, while at the same time minimizing the incidence of compromise. Talking about the 3 C's.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
Welcome back. You are still watching Tax Matters. One of the major initiatives put in place by the Executive Chairman of the FIRS, Mr. Babatunde Fowler, since assumption of duties, is the introduction of the Federal Engagement and Enlightenment Tax Teams, FEETT, FIT for short. Christina sat down with the head of the FIT team at the FIRS, Alhaji T.K. Oseni, to find out the workings of the FIT team. But before the interview, let's show you clips from one of our outings with one of the various FIT teams.
Good afternoon, my brother. How's business? We're a team of Federal Enlightenment and Engagement Tax Team. This is a new department in FIRS. Government discovered that many taxpayers, they don't even know what FIRS stands for. But that's why the management of FIRS deemed it fit to go and meet taxpayers one-on-one to discuss with them. If they have any issue with them, can resolve it. How's business? Alright, your face keeps so much. We are not here to harass you. Partner in progress. This is a team of Federal Inland Revenue Service.
On our guest corner today, we have with us a director at the FIRS. He's heading a new department that he will be talking to us about. He's Mr. T.K. Oseni. You're welcome, sir.
Thank you very much. My pleasure.
For the sake of our viewers, what is FIT?
Well, FIT is FEET, and it stands for Federal Engagement and Enlightenment Tax Teams.
Okay, now what are the activities of FIT?
Well, by the connotation of the name, we will engage, enlighten, sensitize the public concerning taxation and tax payments in Nigeria. And we have established these teams across the 6 geopolitical zones. The department was established by the executive chairman of the Federal Inland Revenue Service just a couple of months ago, but we are fully on ground now in the 6 geopolitical zones.
Okay, so how do you carry out your activities?
Okay, we are aware that we need to sensitize the public because research and investigation have shown that we have 3 or 4 types of people in Nigeria. There is a set of people who don't know anything about taxation. There is another set of people who know about taxation but they don't want to pay. And there is another set of people who know about taxation but they don't know where to pay or what to pay. So in summation, all these people, they need to be educated, enlightened, and sensitized. And that is the reason for the birth of this department.
Okay. So what would we say are the mediums you use in creating this awareness?
The primary and direct medium that we use is the contact, direct contact. I just told you from the coordination of the teams, we have teams, and a team comprises of 10 staff. They go out as a team every day, Monday to Friday. They would select the particular area in their jurisdiction where they will go and sensitize people, and they go from house to house. However, we have programs where we meet with associations, stakeholders, where we sensitize them. But these are periodical programs. But on a daily basis, Monday to Friday, they will pick a part of the jurisdiction, and they go out by 9 o'clock in the morning, and they don't come back to the office before 5 p.m. every day.
So now, are we going to say that just this direct contact has been very effective?
Very, very effective. Very, very effective. Because you see, apart from the direct contact, we also give out flyers that people can actually go home and study. And we have all different kinds of flyers. Frequently asked questions. We have determined the kind of questions potential taxpayers ask, and we have preferred answers to these questions. So even if I don't have enough time for you, you can still take this flyer home and study, and you'll be convinced that you need to pay. You have no choice.
What has the journey so far been like?
Well, let me tell you that the creation of this department, we have two primary aims in terms of goals. One is to sensitize the public, create massive awareness. Second is to increase the database. In going out, we determine those companies and individuals who are not in our database. And once I'm able to create the awareness, convince you need to pay your taxes, you will come into this database, and that's going to increase our database. And once we can increase the database, it means more revenue to be generated. So that's the purpose. Those are the two goals. Create massive awareness, and then increase the database that will directly translate to more revenue generation for the government.
Okay, now I just want to confirm now, in this direct contact, the way you talk to people, what about people in the informal from the informal sector that are not really educated, they don't know much about taxes? Do your team members, are they grounded in the different languages, the different method?
You see, at the federal level, we have to consider the federal character. And depending on the zone or the jurisdiction where the teams will be located, that must be considered in the formation of the teams. For instance, take Lagos. If the area is Alaba, in a team of 10, I must have minimum of 5 Igbo speaking, not necessarily Igbo speaking staff in that team. If it's an area like Idiaraba or Balinde, I must have minimum of 5 Hausa speaking staff in that day. These are the considerations in the formation of these teams. And in the up north, because I told you these are the same considerations. Language is very key in communication. So it's a very key consideration in formation of it. We don't just pick staff into these teams. We have to consider their deliverables. And language comes first. Apart from the knowledge of taxation, language is key. Because if you understand taxation and you cannot communicate with me, you can't convince me to pay tax. Yeah.
Faith. This your engagement team. Are they the same as the enforcement team that come with policemen, are ready to, lock up the offices, the shops, and just take us away? Should taxpayers be afraid when they see them?
I will tell you outrightly, there is a major difference between the feet and the enforcement. And in the real sense of that procedural attitude, engagement comes before enforcement. We will have, even when we have established a liability, we will have determined that you don't want to pay before we come and enforce. But the attitude is, when the feet teams go out, they are 10 in number, but the 10 of them will not come into your premises. Once they get to the field, they will split into 3-4 units as determined by the head of the team and as determined by the location. For instance, if they go to a market now and they have to talk about 200 people, then they will go there in a team of 10 and they will address them in a team of 10. But if they have to come to your private office to come and educate you, a maximum of 3 will come into your office. That's the major difference. Unlike the enforcement team that will come in a group with policemen, with video recorders, journalists, so that there will be no misunderstanding or misconception. So that's the major difference. My team, they will not come armed. There will be no policemen with them. And they will come in a goodwill manner to come and educate you, not to come and fight you. We know that people are afraid of tax people, but we try as much as possible. And they will come with smiles. An enforcer will not smile with you because he has given you all the privileges to pay, and you have refused to pay. So he has come to enforce. There will be no smile. But with the feet, they will come with smiles. Whether in the morning or afternoon or in the evening time, they will come to your office or your location with smiles. So those are the major differences. So people don't have to be afraid of it.
Taxpayers, you have heard it. Do not be afraid. When next you see a fit team at your office, in the market, anywhere you are, accept them, receive them, listen to what they have to say. Remember, paying of taxes is our responsibility. Thank you, sir, for coming on the show. We hope that when next we call upon you,
my pleasure,
you'll be here.
We thank you most sincerely for watching. Let's do this again next week. Same station, same day of the week, same time of the day. From Christina.
Thank you for watching. See you next week.
Have a good week ahead.